Every rule I am about to give you was paid for in blood, and the blood was mine. I lost 2 complete fortunes learning them, not because the market was cruel, but because I was arrogant enough to think I knew better than it did. So understand something before we begin. This is not a story about millions. It is not a Wall Street fairy tale, and it is certainly not motivation. These are rules. Rules that built fortunes, and rules that buried the men too proud to obey them. Rules that can protect your capital and sharpen your edge, but only if you are disciplined enough to follow them, when every instinct in your body is screaming at you to do the opposite. I never guessed. I never trusted luck. I watched, I waited, and when the moment was right, I struck without hesitation. Most traders lose because they crave action. They confuse motion with progress. They gamble and call it trading. I did not gamble. I operated. And now I am going to hand you the same rules I lived by, so you do not have to pay the tuition I paid. Before we begin, subscribe, like this video, and leave a comment, because that simple action puts these lessons in front of more people who need them. Here is the first rule, and it is the foundation everything else rests upon. The market is never wrong. You are. There are not 2 sides to the market, the bull side and the bear side. There is only one side, the right side, and the market is never on the wrong one. The sooner you swallow that truth, however bitter, the sooner you stop wasting your life trying to outsmart something that does not even know your name. In my early years, I committed the worst sin a trader can commit. I tried to predict. I had a theory. I had logic. I even had confidence. And the market does not care about any of those things. I remember watching a stock climb with real strength, heavy volume, relentless momentum, everything a rising stock should have. But I decided it had gone too far. I decided I was smarter than the tape. So I sold it short. I bet against the trend, and the trend simply ignored me. The stock kept rising, and it took a fortune out of my account on its way up. That afternoon branded itself into my mind forever. The market does not punish you because it is heartless. It punishes you because you refuse to listen. From that day, I stopped fighting the tape. I stopped asking what should happen and started reacting to what was happening. If the market says up, you follow. If it says down, you do not argue. Your opinion does not move a single share. Your money does. And if your money is on the wrong side, no amount of being clever will save you. That leads directly into the second rule, and its simplicity is a trap that fools thousands. Buy what is going up, sell what is going down. It never was my thinking that made the big money for me. It was always my sitting, and I sat on stocks that were already moving in my direction. I never bought a stock because it was cheap. I never bought one because I liked the company or admired its management. I bought it because it was rising, on volume, with conviction. Momentum is not random noise. When a stock climbs on heavy volume, that is not a fluke. It is a footprint. It means someone with more information and more capital than you has already decided where that price is going. Most traders do the exact opposite. They hunt for bottoms. They fall in love with bargains. But a cheap stock is usually cheap for the most honest reason in the world. Nobody wants it. My largest trades were in stocks. The public was already calling overbought. The railroads, the steel, the oil that everyone said had climbed too far. I did not call them overbought. I called them winners. And the rule cuts both ways. When a stock is falling, do not appoint yourself the hero who catches the knife. Do not sit there guessing where it might bounce. Sell it, or stay out of it entirely. I never tried to start my own wave. I rode the ones that had already begun. The trend is your closest ally right up until the moment you decide you are smarter than it. And in that exact moment, it becomes your executioner. The third rule is where patience turns into precision. Never enter without a clear entry point. There is no room for hope in this business. Hope is not a strategy. It is the emotion that keeps losers holding losers all the way to zero. Confirmation is the strategy. I never bought because it felt like the right time. I waited until the market itself showed me it was the right time. Most people bleed money because they need to do something, anything, to feel like participants. They believe trading is about being busy. Trading is about being exact. I studied the tape for hours, sometimes for days, learning to recognize what I called the pivotal point, the precise moment when price action confirmed a genuine shift rather than the usual random chatter of the day. Let me give you a picture of it. There was a stock that had drifted sideways for weeks, going nowhere, and nearly everyone had abandoned it out of boredom. But I watched it in silence. I noticed it simply refused to go lower, no matter how the pressure came. I noticed volume beginning to creep in quietly at certain levels, and then one session it broke clean through its resistance with force. That was my signal, and not 1 second before. If you enter too early, you have handed yourself over to randomness. If you enter too late, the move is already gone. But if you enter on confirmation, with discipline, you have manufactured an edge out of patience. I never guessed my way into a position. I positioned myself and let the market come to me. Now, once you know how to enter, the fourth rule governs how much. Position size is not merely risk management, it is strategy itself. I never went all in on a single decision. Only fools empty the clip on the first shot. I built my positions as the trade proved itself worthy of them. If a stock moved in my favor, I added to it. If it moved against me, I cut it or stepped away entirely. Hear this clearly, because it is the difference between the men who survive and the men who detonate their accounts. You do not double down on a loser, you add to a winner. When I entered, I did not buy my full intended size at once, because that is gambling dressed up as conviction. I started small and tested the water. Say I intended to own 3,000 shares. I would begin with 1,000. If the stock advanced and held that gain, I bought the second 1,000. Only if it continued to confirm real strength did I commit the final 1,000. Do you see the beauty of it? The market itself paid me to increase my risk. My size grew in step with the evidence, never with my emotions, and never with my predictions. I was never afraid to go large, but only once the trade had earned my confidence. So many traders blow up because they bet everything on their opening move, fall in love with the idea, and get carried out on a stretcher before the trade ever had a chance to prove them wrong. Your position should never grow larger than your discipline can carry. The fifth rule is the one amateurs never respect until it is too late. Exits matter more than entries. Anyone can enter a trade. A monkey can buy a stock. Only the disciplined know when and how to leave. And how you leave decides whether you actually won or merely got lucky one time. I made my first real fortune in the panic of 1907, and I want you to understand exactly why. It was not because I caught the precise top. It was not because I predicted the moment of the crash to the hour. It was because I knew when to get out. While everyone around me held and prayed and told themselves it would come back, I sold. I did not need perfect timing. I needed to protect profit and preserve capital, and those are entirely different skills. I followed the same discipline every single time. When the market tells you it is finished, you believe it. I would watch the price action change its character, watch the volume dry up, watch the momentum quietly weaken. None of those were accidents. They were the market speaking, and I acted on its words. Most traders do not fail because they cannot find good entries. They fail because they let winners rot into losers, because they let hope quietly replace discipline. I never married a trade. I never held just a little longer because I wanted just a little more. When the market turned, I turned with it, and yes, sometimes that meant surrendering further upside. But far more often it meant walking away with what I had earned, while other men stood frozen, watching their gains evaporate in real time. It is not how high the stock goes. It is what you actually walk away holding. You make your money when you exit, not when you enter. The sixth rule cost me more than any bad chart ever did. Do not listen to advice. Listen to the market. The worst losses of my entire career did not come from misreading the tape. They came from listening to people, to brokers, to friends, to newspapers, all of them armed with opinions that sometimes sounded genuinely brilliant. But those opinions were never built on price. They were built on ego, on emotion, on rumor. There was one occasion I ignored exactly what the market was screaming at me, all because a man I deeply respected handed me what he swore was inside information. So I held when every signal told me to sell. I waited when I should have acted, and I lost badly, painfully, deservedly. That was the final time I ever let another human voice drown out the message of the tape. The tape does not lie. It has no ego to protect, and no rumor to spread. It shows you only what is real: volume, direction, momentum. People will always work hard to sound intelligent, but the market does not reward sounding intelligent. It rewards being correct, and correctness comes from watching, not from talking. So take no tips, follow no crowds. Do not outsource your brain to anyone. If you cannot trust your own reading of the tape, you have no business risking $1 in this game. The seventh rule is the internal war that decides everything. Separate emotion from execution. Trading itself is not emotional, but traders are, and that is the entire problem. A man must believe in his own judgment to survive this game, yet he must execute without a trace of feeling, and reconciling those two things is the hardest work there is. I made and lost fortunes, and never once was it because my system failed. It was because I let fear, greed, and pride seize the controls. I chased trades I had no business touching. I froze on trades I should have executed on instinct. Why? Because I was a man, and men feel. But I learned, at enormous cost, that emotion is the enemy in the chair beside you. It clouds your judgment. It delays your hand. It whispers comforting lies at the precise moment you need cold truth. The market is already a difficult opponent. The moment your emotions join your decision-making, you are no longer fighting one battle. You are fighting two, the one on the screen and the one inside your skull. So I built habits, rituals, rules. I obeyed regardless of how I felt on any given morning. If a trade hit my stop, I was out, no negotiation. If my signal appeared, I was in, no hesitation. I kept written records. I reviewed my own trades as ruthlessly as I studied the market, because I understood that even a flawless system will collapse if the man running it sabotages it from within. And that brings me to the rule almost no one believes until they have lived it. The biggest profits come when you do absolutely nothing. The real money is made in the waiting, not in the trading. Everyone craves action. Everyone wants to feel busy, productive, involved. They have convinced themselves that activity equals progress, and it is one of the most expensive lies in this business. Some of my largest profits came from trades where, after entering, I simply sat. The setup was there, the price moved in my favor, and then I did nothing at all. I did not tinker. I did not lock in a small gain to feel clever. I did not jump to some shiny new setup. I sat, and I let the market do the labor on my behalf. Most traders quietly destroy their own profits through overmanagement. They cut their winners far too early, and then chase fresh trades instead of letting the good one run its full course. And they do it because sitting still is genuinely hard. It feels like a loss of control. But here is the paradox that took me years to accept. You gain control precisely when you learn to let go. When the trend is working for you, your job is not to outthink it. Your job is to hold. I built empires by sitting calmly on positions, while other men were shaking themselves out, second-guessing, and scalping pennies they would have to give back tenfold. Patience pays more than talent ever will. The discipline to enter well is good. The discipline to exit well is crucial. But the discipline to simply wait, that is where the true fortune is buried. The final rule is the one that determines whether you are still standing years from now. Learn from losses. Never excuse them. Losses are the tuition of this profession, and how you respond to them decides whether you graduate or get expelled. There is nothing new on Wall Street, and there never can be, because speculation is as old as the hills, and yet every single generation arrives certain it has discovered something the last one missed, and repeats the identical mistakes. When I lost money, it was never because the market betrayed me. It was because I betrayed my own rules. I once built a fortune and then handed the entire thing back, not because my system stopped working, but because I stopped working my system. I broke my own discipline. I ignored my own stops. I let my pride speak louder than the price on the tape. And the loss that followed was not just money. It was time. It was momentum. It was confidence. All of it drained at once. But I did not make excuses, and I did not blame the market. I sat with the wreckage. I dissected the mistake until I understood exactly which rule I had broken and why. Then I rebuilt with a sharper edge and fewer illusions than before. Every mistake carries a lesson folded inside it, and most traders throw the lesson away and keep only the pain, which is precisely why they stay broke. If you refuse to learn from a loss, then you paid the tuition and skipped the class. So if you truly want to become an operator instead of a gambler, stop protecting your ego and start protecting your capital. Never justify a bad trade. Dissect it, write it down, study it like evidence, because the only thing more expensive than a loss is the same loss suffered twice. So let me leave you with the truth that ties all of this together, the truth that outlived my fortunes and will outlive yours. Success in this game is a system, never an intuition. I did not rely on luck, and I did not trust my gut. I built a structure, and I obeyed it. Rules for entry, rules for exit, rules for size, rules for sitting, rules for loss. And every one of them existed to protect me from the most dangerous person in the room, which was always myself. The amateur says he had a feeling, and that feeling costs him his account. The professional says he waited for confirmation and followed his plan, and that mindset builds empires that survive the man who built them. Do not chase perfection. Do not hunt for magic setups that do not exist. Chase consistency, because this was never about being brilliant. It was about being repeatable. If your strategy cannot survive your emotions, your drawdowns, and your inevitable mistakes, then it was never a strategy at all. It was a bet wearing a costume. I lost everything, more than once, and I came back every time for one reason only. I had rules, I had structure, and I refused to let a single failure become the final one. You do not need luck to survive this. You need discipline, you need control, and above all, you need rules you respect more than your own opinions. Follow them, or the market will take everything you have, patiently and without malice, exactly the way it took mine before I learned to listen. If these words landed somewhere real in you, then you are not here by accident. Subscribe now, like this video, and leave a comment, because that simple action helps more people find these lessons, and it tells me the work still matters.